Hi guys, how are we doing? So a quick trade recap from a position I took last Wednesday, the 16th of June, yeah, which actually came from just the high time frame buys I had on the D1, and then I was able to scale in on the 5 minute to look for the actual market structure, and then scale in the 1 minute to look for the actual entry. So coming in to the 16th of June, we've had the market leave a very nice D1 candle here. So why was I bearish on the D1 to start off with? So last 2 weeks of May, we saw these very hard move up in price action up here, where we actually took out this high there, and ever since the market just kind of slowly started to drift downwards, left this classic. You can say it's a classic retail candle because everyone knows about these candles, but to actually make them work efficiently, it's quite hard. So that's the classic upside down handyman here, and then another one in there, which it just indicates selling pressure. And as soon as, like, I've seen these candles over and over again on a euro dollar, and when the market leaves these candles, you see strong reactions from them. So this D1 candle here, we saw immediate selling pressure. This D1 candle here, same thing happened. After the market printed this candle, we took some orders from these highs here, and market flushed to this low there. So if I just mark it out, you'll be able to see. And as the market flushed downwards, what it did is it rejected these lows in 3 days, 3 separate days. So 11th, 14th, and 15th, market rejected this low, then came back up. Where did it come back up to? It came up to these two lows there. So the low from the 7th of June and the low from the 10th of June. And if I just mark that with an arrow, so you're able to see better, 2 seconds. So market came straight in there, and it tapped these two lows from the day there, which are very close together. So this low was 21432, and this low in the market was 21449. So when the market came in at 21473, tap these two candles there, and then closed below. So closed close to close to where it actually opened for the day. And to me, that was an indication it wants to push lower. So to me, I was looking for these lows, these actual new low to be attacked on the day. So this low to be attacked going into the 16th of June, because as the market came back up to touch this inverse level there, so it came back to this candle here, and actually just indicated to me there is going to be, well, indicate to me there's going to be sellers in the market willing to push the market lower. So that's where I was looking for entries on a 5 minute. So if I just hop over to what actually happened on the 5 minutes. So this is the 15th of June. You can see the market opened, went to the upside, went to the downside, and closed not far from where it opened here. So coming to the 16th of June, what I was looking for is a run on the Asian highs. So anything, so we've got the Asian range marked out here. So any price action that actually comes in, takes out these Asian highs, and then flushes lower, breaks market structure, comes back up, and then just flushes the downside. That would have been the perfect scenario for me. So let's have a look what actually happened. So I paused PA just at the end of the Asian session. So, and the end of the Asian session coincided with these highs there. So straight away, that's a very, very good area of interest for me where I'll be looking to take short positions. So if I just play price action, play a bit slower, so you'll be able to see. So market comes in, kind of, this is like the start of the London trading. So there we have that run on these highs here. And as soon as the market takes a run on these highs, let me mark up this level so it's quite clear what I'm looking at. As soon as the market comes and has a run on these highs, it immediately starts to collapse. And in my opinion, it's looking for these swing point here. It's looking for its next area of liquidity. So if I mark up the swing point there, that was the area where I was looking for a market structure break. So just worked that out, so it's quite clear when we move time frames. So this is the area where I'm looking at market structure break. So what I just said a minute ago, where I'm looking for price action to break this, then come back up and look for those entries on the M1. So if we just carry on playing price action, see what actually happened. So there we have it. We have a 5-minute candle close on at around 8:05, was it? Yeah, breaking this low there, which was crucial, which is exactly the sort of thing I wanted to see. So now, when I scale in the 1 minute, looking for those entries, I'll be looking for points in price action where there's evidence of these big player stacks. So what I mean by these big player stacks is areas of price action where it's evident these big players in the market have left a footprint. So where they're pushing price one way to force buyers or sellers to actually enter the market, and then completely going the other way against them. So where they're able just to take the orders, as we all know, like the market moves on liquidity. So for every buyer, there has to be a seller. So that's what they're looking for. They're looking to push the market one side and just take the opposite side to all those guys who want to buy or who want to sell. It depends which way the market is going, which way they want the market to go essentially, and which way they want to unload these stacks. So as we've seen this break of market structure here, that's where I'm going to narrow in on the 1 minute, look for those entries. So go on the 1 minute. So when I look at this, an area where I'm very interested in is this area here. So these two bullish candles that actually force price action up to the high of the Asian session. So which was right here on this level there, which coincides with the high we're looking at from the previous day, not the high of the day, but a very strong area of liquidity here. So this is where I was looking for to enter the position. So as the market broke lower, I stuck as soon as we closed there on the 5 minute. Let me just move that across. As soon as we closed there on the 5 minute, I was looking to enter the market here at the start of where there's evidence of these big players actually stacking up the orders and stacking up all of the positions. So my high is going to be in line with this high there, and then my low was actually at the Asian session. Yes, so what I was looking for coming into this trade is, as I was saying, to enter the market at the evidence of these big player stack, and then actually targeting the Asian session low, as it's a very nice target for the 7 a.m. like 7:30 entries. So this is where I just left my P&L. You can see in line. I'll mark it out here so it's clear. I'm low 21667. I believe the low was, yeah. So that's where I had my P&L. As soon as we broke this low, this was where I was looking for the market to come here, come into this area, something like this. Come into this area, kind of reject it, come back to my entry and just flush downwards eventually. I'd normally look to take my profits around 8:30, 9 o'clock. So this is what I was looking for, and then see what actually happened. If I just go back on a 5 minute, much easier to see, well, quicker to see the actual price action. So market kind of traded downwards, came back up, and then just slowly drifted between the hours of 9 and 11. It was you just kind of slowly drifted, and I'll explain why in a minute. But eventually, just move. What you see happen is the market eventually trade downwards on the 5 minute. I was actually observing this trade on a 15 minute. So don't normally watch on the 1 minute and the 5 minute, as it's just too much going on, and you just have conflicting biases in there. So I do stick with watching the 15 minute for my trades. But eventually at 11:45, I believe target was hit there, which is a very, very slow day. So going back on the 1 minute, what we've seen here is, all right, so my entry was there, market comes in and completely goes through these big player stack that's been left in here, and we see a rejection. If beautiful rejection, market flushes downwards, comes back in, and we see another rejection. So what's actually going on here? So these is evidence of the protection of orders by these big players in the market. Clear highs, not trading through. As if this was to trade through, I would have exited the position straight away on the 5 minute. But as these candles actually LT'd, so less liquidity traps in the market, where we've seen market come up, reject this high, flush down, come back up, reject this high, and flush downwards. I was confident we will actually see this trade go to target, as I've seen this scenario many times before. Why was it so slow? So take profit was 11:45. The actual entry in the market was 8:20. So the 16th of June was FOMC day. So naturally, before FOMC in the mornings and leading up to the New York session, we do see quite slow markets, just because there's less liquidity, there's less players, and the markets are just anticipating or pricing in the actual FOMC meeting and what's going to be said at the meeting. So in that with mind, I was comfortable holding this trade for a longer time, as I was only looking for 11 pips. And between the hours of 8:30 and 11:30, well, 11:45, when we actually exited the position, the market only moved around 17 or 18 pips, I believe. Yeah, 17 pips during the London session. The euro dollar, it's not a lot at all. But targeting the Asian low, which I normally do with this trade, I was very comfortable holding this position. So eventually the market will trade downwards. So, well, yeah, that was a nice 1.56 on a trade at 1% risk. So yeah, thanks for watching, guys.